I won't stop till I hear him say,
What is going on, CYPRX advanced YouTubers? Welcome back to the CYPRX YouTube page. As always, if you're interested in learning about cryptocurrencies, commodities, indices, foreign exchange, please go ahead and consider subscribing to the YouTube channel. In today's video breakdown, we're going to go over some price predictions on XRP. I'm also going to cover this 1-to-3 risk to reward ratio that I placed on my CYPRX account. Before we get down into the fractal nature of things, I'm going to give you guys my higher time frame analysis and price predictions for the up and coming future, maybe potentially for the rest of this year for XRP, some key levels of interest to pay attention to, some things that we would need to do before we can confirm any type of bullish momentum move back to the upside to head back towards $1 on XRP. So my trade that I placed, I traded this on the 15-minute chart and below. So first, before we go into this lower time frame perspective and trade analysis that I placed and full breakdown, I'm going to give you guys a full disclosure breakdown on this trade right here. But before we do that, let's go to the higher time frame. I know that a lot of people watch this YouTube channel based off of my analysis, so I'm going to give you guys that higher time frame analysis for those of you individuals who watch the analysis, especially pay attention to all the call outs that I make on Twitter. I will screenshot this and update you all on Twitter as well, so that way you guys have, proof is in the pudding for when this type of price action does play out. We have something to go back in time and actually reference off of. Okay. So first, I want to take your attention to current price action. Right now, we are operating roughly around the May lows, roughly at around 33.5 cents and so on. Okay, you guys can see that we are in an area of consolidation. Okay, so one key major factor that needs to take place on XRP before we see any type of bullish reversal is a break in a bullish sustainable hold above the May highs, and that is roughly at around 65 cents. So let's just piece together the logic that I'm seeing in the market based off of the lower time frame price action analysis that we give you guys here on CYPRX. We can correlate that with higher time frame, and we can see what it is that we would need on the higher time frame to confirm any type of bullish move. Well, you can see here that this May low was violated in June, or by current price action, okay, or this area of consolidation. So respectively speaking, this was a violation of a low. Now let's just pretend that this was on the lower time frame. What would we need to see in order to confirm any type of bullish reversal permanently on XRP? Well, because we swept the low in May here in June, what would we then need to see? We would need to start seeing a bullish order flow scenario where the market starts to create higher highs on the higher time frame in comparison to the previous highs, right? Then we would need to see the market create higher lows and continue the trend higher. Now, at any given point in time, we fail to break the May high at 65 cents. We have to understand that this could be an institutional move for the banks and the whales to push price into premium for themselves from where they sold off in May to take further sell positions down into lower time frame targets. So until we see a bullish sustainable hold and break above the May high, I am temporarily bearish on XRP. So if we do see any type of bullish release rally on XRP, you guys be mindful, look for profit target areas. At least that's what I'm doing. Currently, I'm not adding any more long-term positions on XRP until we do see any type of lower price action. Right now, I'm just trading XRP on my leveraged CYPRX account, so that way I can move my stops to break even, partial out, and temporarily build my portfolio via my leveraged account. My long-term holdings, I did dollar cost average into positions at about 29.5 cents on this recent dip. However, I'm not looking to buy any more long-term XRP holdings until we do see a depreciation in value, if we do see that depreciation. Now again, logically speaking, let's look at price action. We know that this May high was a lower high in comparison to the previous April lower high here in this area at around 77 cents. Now, I had covered price action on previous YouTube videos of roughly around 77 cents. This is where in April, just around my birthday on the 15th, I was warning everybody that the price action on XRP was going to dump, and we got that significant sell-off. So logically speaking, on the higher time frame, let's just map this out. We would need to see a sustainable break above the May high, okay, something roughly like this, and we would need to see that May high hold as some type of quote unquote bullish support, right? Either that or it would need to respect one of the higher lows leading into the May high, and we would need to see a price continuation on XRP above the May highs, okay? If at any given point in time, again, I'm telling you all right now, we do not see a sustainable break and hold above 65 cents and a bullish continuation up higher, be mindful of the price action and that we could potentially see a dump down into the 24 to 17 cent psychological levels. Those are my lowest targets on XRP. Personally, I do not see XRP going below 17 cents. However, again, nothing is guaranteed in this market, and we could see lower price action, especially if Bitcoin dumps to subpar of anywhere between 12 to some people are even predicting 9K, okay? So let's just be mindful of that up and coming price action. We know logically what we would need to see in order to confirm any type of bullish reversal on XRP, and that is a break and hold above the 65 cent psychological level May higher region. And if at any given point in time we do not see that, but we do see a price appreciation into these levels, and we see a bearish sentiment kind of pick up and overwhelm the market, we know most likely what the banking institutions are doing. They're building some type of buy trap scenario beneath these lows in June, and they're going to manipulate the market to the upside to take sell positions from previous premium sell regions, and they're going to dump one more time down into these lower regions to grab all the over leveraged buy positions that are formulating right now beneath these lows from people who think that the bottom is in. So again, just be mindful. So to confirm my analysis long term, for us to see a price move back into the dollar region on XRP or confirm any type of bullish reversal, we would need to see a break above May highs. At any given point in time, the price action on XRP is extremely sensitive, and we could see a dump down into the 24 to 17 cent psychological level. You guys have my bullish and bearish targets on the higher time frame. Mark those off on your charts if you feel that it's necessary. Again, I'm not telling you to buy or sell XRP. This is just my overall analysis. If we do not break that 65 cent psychological level May high, most likely we are going to see a nice dump on XRP down into the 24 cent to 17 cent psychological level. Now let's go into the lower time frame trade analysis that I placed today on XRP, a beautiful RR ratio of 1 to 3, showing you guys time and time again that the CYPRX strategy plays out to the T. If you guys are patient, you wait to trade outside of the manipulation window, you target liquidity, you get in and out of the market as fast and as quickly, as swiftly as possible. Remember that the banking institutions are utilizing areas of liquidity as their targets, so should you. You guys should take that into consideration when you're placing trades. Does your trade have a logical target area of liquidity? Are the banking institutions going to aim to shoot for the region and the direction that you're trading in? Okay, so we are on the 5-minute chart. I just want to take your attention to the piggyback methodology that we utilize here at CYPRX. We know that the banking institutions prior to the New York session, during the London session, take two main positions, and we can see that the average of those two main positions was roughly at around 32.5 cents. I will go ahead and I will mark that off for you all. Okay, so we have 32.5 cents right here. Okay, and then we have another position where they push price down at the discount for themselves before passing price action over to New York, where the manipulation window started. And we can see London session took a second buy position roughly at around 32.5 cents. We'll chalk that up to just roughly above that. Okay, so we can see how they added to their overall order. They took one position here after liquidating over leveraged buy positions prior to the London session window in the manipulation region. You guys can see that here. If we were to draw a manipulation region on for London session, this would be it. And we can see how they liquidated those buyers down here in this general vicinity before taking their buy positions, okay? Building liquidity to the upside during the manipulation window in the form of what? Trendline liquidity above highs. And we can see how they targeted during the London session that area of liquidity. They manipulated price to the downside to give themselves discount to liquidate over leveraged premature buyers during the London manipulation window. And then they targeted retail resistance sellers who were selling at these points around this trend line. Okay, so coming into the New York session, we had an area of interest where the banking institutions during New York session would need to break in order to confirm a reversal bias, meaning we would need to take out the 32.5 cent psychological level or average price region where London session bought from to reverse our bias from bullish order flow to bearish order flow. So we would need to see this bearish price leg that the New York session started to print, break this low, create a new swing low in the market, and then create a lower high and a continuation down to start to look to take sell positions. However, we never got that price action. So with that analysis and the fact that we can see that this 32.5 cent region held during the manipulation window, we can jump down to the lower time frame to start to see if we can see any type of institutional patterns identified in the previous course material on the CYPRX YouTube that I've shown you all to catch buy positions to move in tandem with what the bank and institutions are doing. Well, during this New York session manipulation window, we can see that they set up a liquidity trap in the form of a double top formation. Just so happened to be that this double top formulated right in the manipulation window that I've preached to you guys multiple times on the channel. Now we can see down here in this general vicinity any type of bullish order flow pattern fractally, which would be what? A low, a violation of that low, a break in market structure, signaling a what? A market maker pattern move, where the market makers we know are the only people with the amount of money to manipulate price through lows to take discounted buy positions to then push price in their favor. Once we see this pattern happen, we know that it is a higher probability to have a trade go in our favor if we seek to enter in at a potential discounted price over to the right hand side to continue the trend up. Okay, so let's see fractally if we can see that. Let's jump down to the 1 minute chart. Okay, absolutely beautiful. So the area that we have circled off, you guys can see that pattern exactly to the T. You guys can see during the manipulation window, we have now fractally a triple top formation, or where retail traders are looking at this as some type of head and shoulders pattern, right? You guys can see that right here. I'll just mark that off. This on baby pips is a head and shoulders pattern where the bank and institutional traders are setting up a retail pattern trap because they know that retail traders like to trade and take short positions from this type of pattern. They're over leveraging sells here. They're chasing the market. They're also putting in sell positions all down here in this bearish leg, chasing bearish candlesticks. So now we have over leveraged sell positions all in this general vicinity. And on the flip side, we also have people who are going to be willing to buy in the form of buy stops if price surpasses these highs. So this is an area of liquidity that we can target if we see a bullish reversal. And this also happened to take place during the manipulation window, which solidifies some of the things that I teach you here on the YouTube channel. Now, coming into the breakout of the manipulation window, what can we see? We can see that the market showed us a willingness to reject where London session bought from, which was 32.5 cents. We can go ahead and we can take from the candlestick bodies down to the wick, turn this into our bullish area of interest. We understand the bank and institutions prior to every single session have two main areas where they buy or sell from, where here we can see that this was the main area where London session bought from once, then pushed price back down into discount and bought from again. If we take from the low during London session to the high, where they put in their first order and extend that over, we can see that right before they passed price action over to New York, they added in another order at around 79% discount. Again, where the bank and institutions like to buy from. Coming over here, as soon as we break out of the manipulation window, what's the type of price action that we can see? Well, number one, we have an area of interest to target if we are going to take buy positions, which solidifies our trades here at CYPRX. We want logic in our target areas. We do not want to just be trading the markets aimlessly, okay? We can see that that blue line or the blue box that we had extended over from where London session averaged in at did not get broken. So we did not create a lower low on the higher time frame. This would roughly be a 15-minute low. Okay, we do not create a lower low. Instead, what do we get? We get a violation of lows and the market showing us a willingness to print fractal bullish order flow. So again, we see fractal bullish order flow, a violation of a low, and a market reversal pattern, which is right here. Okay, so we see higher high, higher low, higher high, higher low. Again, why is this a higher low? Because we failed to break the low, the overall low, which led to a market higher high. Okay, we're still not looking for trades yet because we're still operating in the manipulation window. As soon as we break out of the manipulation window, this is how I caught this trade entry, being very patient, understanding that if we do not break this bullish box right here, again, from where London session averaged in price at around 32.5 cents, most likely the market makers are going to put in a buy position to attack the what? The people who were over leveraging sell positions above these highs during the manipulation window prematurely to the start of the New York session. We know that bank and institutions do not sell from lows. So when we break out of the manipulation window, ask yourself the question, where are we operating at? We are operating at a low. We know that the bank and institutions are not going to sell low. They are going to do what? Look at this. They are going to sell from a high. They're not going to sell from a low. So when we break out of the manipulation window, we have a few things that we can piece together. Number one, that we have failed to break the blue box where London session bank and institutional traders in Wales averaged into price at around 32.5 cents. We also understand that the banking institutions left behind a retail pattern trap where we know over-leveraged retail traders are taking short positions above these highs in the form of baby pit patterns, head and shoulders patterns, whatever it is that you want to call them. Okay, triple top formation. Okay, this is a retail pattern trap. Right? So now we can pay attention to pattern identification and we can see if we can see the CYPRX pattern that I teach you guys on the YouTube, which is right here. We see the market violate a low again for now the second time and create a new market structure high. Okay, so we see the market break out of the manipulation window. It created a low right out of the manipulation window. We violate that low, and that leads to a rejection of a psychological level that rejected the area of interest from where London session averaged in that price. And we can see that that led to a new market structure break and price action. Okay, so now that we have a new high, we have a new A to B move. Simply all that I did after we broke out of the manipulation window was I extended my Fibonacci. Again, your Fibonacci tool is a tool that can help you determine where institutionalized discount is going to be at some point in time in the future. You're measuring once you see a 25% retracement of the leg that broke previous market structure. So right here with this bearish candlestick and this gap in price action when the new candlestick opened, this was roughly at around 25% discount. So we can go ahead and measure from the low to the high that broke previous market structure and extend that over. Now I entered in a little bit late here. I could have entered in at the 62% discount, but I was nervous a little bit. I'm not even gonna lie, mainly because of the volatility and price action the past couple of days. So I waited until the market appreciated back above 50%. I entered in with my stop loss right beneath the previous low, and I was simply just targeting a 1 to 3 RR to come and target the liquidity above the early sellers prior to the New York session in the manipulation window. And you guys can see how the banking institutions targeted that liquidity immediately out of the manipulation window, printing an institutional pattern. This trade was very easy to come by. I could have held it a little bit longer. However, I'm practicing on managing my greed. I told you guys that I'm not looking for any long-term positions on XRP. So a 1 to 3 risk to reward ratio where I was risking 1% on my leveraged account on OSPRYFX to make 3% was an absolute beautiful trade execution during this New York session trading day. Absolutely beautiful market execution. I hope that that didn't confuse anybody. What are we paying attention to here at CYPRX? We're paying attention to liquidity in the market via liquidity traps during the manipulation windows. We're paying attention to where previous banking institutions, either Asia or London, bought or sold from so that we as retail traders can take similar positions based off the ideology that banking institutions during New York session, if you're a New York session trader, are going to seek to take buys from the lowest areas of price action. Well, if we can imagine this is the area of interest where Asia session bought from. We have 2 institutional orders during Asia, 1 and 2. Okay, you guys can see that here. And we have 2 institutional orders during London session that they took, 1 and 2. We know that New York session 9 times out of 10 is going to attempt to take an institutional order from one of these levels. Why? Because we know that New York session traders are not dumb and they're going to buy at a discount from where previous London and Asia session bought from. So as long as we hold these 3 levels, or coming into this New York session, as long as we held these 3 levels, we were in a buy scenario where at any given point in time, the banking institutions during New York session could seek to take discount buy positions from these lows. And we did exactly just that. We rode the wave to the upside to come and target the manipulation liquidity that was built and set in place above the New York session highs from premature sellers. And you guys saw how that played out to the T. So now you guys have my higher time frame analysis. You guys see how I utilize that as a catalyst on the lower time frame to take buy scalps on XRP USD. I hope that this trade breakdown helped you guys out, understand price action a little bit better. If it did, and you guys enjoyed the analysis, smash that thumbs up button, subscribe to the YouTube channel if anybody's interested in learning the CYPRX strategy. The link is in the description down below for the mentorship. Don't forget, you all can always reach out to me via the customer support email found in the description below. To schedule a one-on-one Zoom call, meet me face-to-face. You're more than welcome to ask any questions that you have about the mentorship program. As always, be cognizant. Please be aware. Blessings to you guys all. I will see you guys in the next YouTube video breakdown.
I won't stop till I make a change. I withdraw on the things I make. I turn flaws into flawless traits. I build tall, never capped in space. I won't stop till I hear him say, oh, oh.